All right. Thank you so much, everyone, for coming to our first panel, Indonesian Blockchain Week. It's very interesting that the topic itself resonates a lot of things related with Web3 landscape in Indonesia, as we have a lot of expertise that will give insights, a lot of insights actually, for today's panel. So I'm going to welcome all the speakers for today. I'm going to welcome Charles Cook. Please give it out for Charles from UOB Ventures. All right, next up, we're gonna have Takashi Hayashida from Taisu Ventures. All right, next up is Marcus Liman Rahardja from BRI Ventures. And last but not least, Kate Wang from Onigiri Capital. All right. Okay, so gentlemen, ladies. So I think before we start the panel with the topic of future of Web3 investment in Asia, this very resonate with a lot of things that have been true for the past like 2 years in the space, especially on Web3 in Southeast Asia, right? But I think before we start the panel, let's do a quick introduction from each of our speakers and expertise who will give insights for today's panel. So Charles, please give a quick intro for yourself.
Hi, good afternoon, everyone. My name is Charles. I'm with UOB Venture Management. So UOB Venture is the private equity and venture capital arm of UOB. And at UOB Venture, I manage a Web3 crypto blockchain fund that invests in early stage Web3 companies globally. So we've been running that strategy since 2021. So over the past 4 years, we have made investments across the whole Web3 tech stack, from infra all the way up to applications, and we've been quite active in this space. So very happy to be here and looking forward to the panel.
Thank you so much, Charles. All right, Takashi, please give a quick intro.
Hi, my name is Takashi. I'm a founder and managing partner at Taisu Ventures. We are based in Singapore and focusing on the early stage startup investments. And we invest in different sectors, all in Web3. We currently have a portfolio of over 130 startups, and we've been actively investing for the last close to 3 years now, and we are still actively deploying, and happy to be here and share our view and thoughts on Web3. Thank you.
All right, Marcus.
Thank you, James. Selamat siang, Bapak Ibu semua. I'm happy to be here among esteemed speakers. My name is Marcus, and I lead investment in BRI Ventures. We are part of BRI Group, one of the biggest bank in Indonesia that is focused on SME. And we are the corporate venture capital, meaning that we invest in strategic project or technology that can create a value creation within the bank. Majority of our investment are in fintech, and now we are also exploring the new fintech revolution, which is the blockchain itself.
All right, thank you so much, Marcus. All right, Kate?
Yeah, and good afternoon, everyone. I'm Kate. So I'm the manager of Onigiri Capital. So Onigiri is a new fund that we just launched a few months ago, and we are actually launched by Credit Saison. So Credit Saison is one of the largest consumer bank, credit card bank in Japan. And the reason why we are launching this blockchain-focused venture capital is because we still see a lot of big potential within the Web3 space itself. That's why we are launching this and expanding our Asia financial institution network that is not just focusing in Japan itself, but across Asia. So this is why Onigiri was launched. And we focus on early stage investments from seed to all the way to Series A, focusing more on DeFi, stablecoin, payments, infrastructure, and tokenization. So this is the 5 areas that we mainly look at. And our investments is mainly global. So we look everywhere to see whether there's any blockchain use cases that we can really benefit the mass adoption.
All right, thank you so much. So I think we have really potential great insights from our speakers as well. But I think we really want to deep dive into the Web3 investment, especially on Southeast Asia, where this is kind of interesting, where's the flow of capital going, how's the current Web2 investment looking at the Web3 landscape as well. But I really want to ask specifically to Charles first. So Charles, we see that there's a lot of builders around here. Of course, there's a lot of investors as well. And we're trying to find a sweet spot to find which angles or things that, what's an investable startup, right? What's the risk and reward that you can invest in a startup company as well? And also, usually if Web2 venture capitals or even like all the angels want to invest, how's the potential upside that I will get in Web3? That's usually the biggest questions. How can I determine that potential upside also? How's the risk and reward? How can I determine that? So what do you think, Charles?
Thanks for the question, James. Actually, there's a lot of questions. I will try and answer them one by one. Maybe I'll start with something a bit more lighthearted since everyone just had lunch. So the way that I think about the various countries in Asia in terms of Web3 investability, right? I like to think of fruits. So Indonesia, for example, I think it's more like a durian, right? It's it's spiky. It looks quite intimidating at the start, but actually once you know how to navigate, dig inside, actually there's a lot of meat, there's a lot of potential. I think Indonesia is a very big market. Population is young. Majority of Indonesian population is actually below 50 years old. So I think there is a lot of potential for this market, especially in terms of real-world adoption of Web3 and blockchain technology. And then if you look across to North Asia, right, if you look at Korea, for example, I think Korea reminds me of kimchi, right? It comes in different flavors, different spice levels, right? It's very tasty, can get a little bit spicy. But Koreans are actually very early and fast adopters of technology. The Web3 talent in Korea is very deep. They can get onto innovation, they can get into new projects very quickly. They pivot fast, they experiment, they iterate. So that's a Korean Web3 culture. And then closer to home, right, where I'm based, Singapore. I like to think of Singapore as kaya toast, right? It's plain, it's boring, it's nothing too exciting about Singapore. But that's precisely actually the strength of Singapore. It's their structure, regulations are there in place. You won't get a heart attack by investing in Singapore. So I think across the whole Asian market, we see different nuances, different cultures. And I think in each of these countries, there are different projects to look out for. Obviously for us, we invest very early stage. So one of the key ingredients we look out for in a project actually is the founders themselves. So we look for countries where there is a deep talent pool, right? The characteristics of the founders in those countries, whether they're hustlers, experimenters, whether they can ship things fast. And if things are broken and it doesn't work out, whether they can pivot very quickly into a new business model to find the right product market fit. So for us, we focus a lot on the founders. I think the second is obviously regulations. I think in some countries, regulations are more progressive than others. I think I've been investing in blockchain crypto since 2020. So over the past 5 years, the regulations have really improved dramatically in Asia and Southeast Asia, right? So I think regulations need to lead the way, and then institutions can come in and then talent flow, and then capital flow. So I think for me, it's founders, regulations, and also how big the market potential is. I think these are three areas we look at.
It's very interesting. Talking about all the founders, all the market, how big is the market as well, especially on the market, right? It's very interesting to see what kind of like indicators or signals to guide your fund. Actually, what's like usually in Web2, where's the smart money, right? I need to follow the smart money, and I want to invest on that one personally. But like for Web3 itself, what kind of indicators or market signals to guide your fund to invest on something? What's next, right?
So I think in terms of market signals, we look at a few things. First is, as I mentioned earlier, we look at the founding team itself, right? The depth of talent pool in each of these countries. I think certain countries in Asia have a deeper Web3 development talent pool than others. So for example, we've invested in projects where the talent pool in terms of tech may not be that strong in that particular country. So some of the founders, they operate their businesses in a cross-border fashion, right? They set up, the founding team, management team is in one particular country, for example, in Indonesia, but maybe the talent pool is elsewhere. Talent pool could be either Indonesia onshore, it could be offshore, it could be a Chinese tech development team, for example. So we do see, in Web3, there is a cross-border, cross-functional kind of the way that these companies are structured. So that's one, the depth of talent pool and how the teams are actually structured. And I think the second is we look at the user behavior in each of these countries. So the number of on-chain activities, how fast the retail wallets are growing, whether there are already local use cases, whether it be in payment, remittances, or real-world asset tokenization. So founders, and then we look at the team, we look at the tech, and I think the last one is I think we spend a lot of time looking at regulatory clarity, right? How progressive regulations are, whether regulation is just a concept or is there like real conversations between the builders and the regulators, right? The pilot programs, how progressive they are, the sandboxes that are being put in place. So I think these are the few broad areas that we focus on. Yeah.
100%. I know like regulations plays a really big part of the industry itself. All right, so Takashi, it's very interesting as Taisu Ventures see this kind of view in a way that we are seeing venture capital global sentiment across Southeast Asia and the global market as well, seeing Asia's Web3 sector evolve in 1 until 2 years across Southeast Asia, right? So I think like, how's the global VC sentiment do you see?
Hi. So I would say that in the past few years, Asia, I feel like by investing almost every month, if not every week in this space, I felt that Asia entered this space by being a marketplace, a growth market for a product or a business model to deploy a lot of interesting solutions and product. But now Asia is gradually becoming an infrastructure showing a very concrete evidence of mass adoption globally of the blockchain itself. So in that sense, I see several sectors who's getting more traction than before, such as like a stable coin or RWA tokenization, or the infrastructure of the Web3 itself. I see more and more new L1 and L2 to be built in Asia rather than building something that was built in US, which is I think the original path in the old traditional way in the Web2 space. So I would say that there's so many different areas such as DeFi, RWA, stablecoin, where that's getting a lot of traction these days. And on top of that, there are increasingly number of developers who's trying to solve the main pain point of the blockchain infrastructure itself by building a L1 or L2, which is the fundamental part of the technology.
I see. So I think like for the technology itself, macroeconomics situation, there's a lot of uncertainty behind it, right? With the Trump and the Fed regulations as well, coming to which Web3 verticals in Asia show strong resilience despite macro uncertainty, because when we went to like Token 2049 and Korean Blockchain Week, everybody's talking about DAT, like digital asset treasury. Everyone's talking about money market fund, right? But looking at the macroeconomic situation as well, which sector do you think is the most resilient?
I believe that resilience is always based on the real use case of the product, wherever you're looking at. And in terms of Web3 space, I believe that in sectors like a stablecoin, where there's a real use case of a cross-border payment or B2B, or real use case on investing to different financial assets that was not investable before without the tokenization or without the stablecoin, wouldn't go away regardless of the macro environment situation, because people who started to, for example, remit money using stablecoin would never stop regardless of the macro environment situation, unless there's a financial crisis level of the situation. But still, people still need to send money. People still invest in equity, commodities, and bonds. And those are utility-driven Web3 business model will never go away and will always be resilient to any external macroeconomic environment. And also, given that the blockchain itself is still a work in progress, where there's still need to grow more in terms of the usability, utility, and also interoperability. And those projects who's trying to solve the main issue within the blockchain infrastructure itself in terms of privacy, security, or interoperability, those innovation would also be resilient in our space.
I see. So I think like we're talking about stablecoin, tokenized assets, DeFi. I'm gonna go to Kate Wang first for this. As an investors in stablecoins, tokenized assets, DeFi, infrastructure as well, what Asian market looks promising today for you?
Okay, so yeah, for us, I mean, Asia definitely is a big potential market that we're looking at, and we definitely want to streamline down exactly which markets, right? So starting definitely from Southeast Asia itself. So for Onigiri Capital, I mean, together with Saison Capital, we recently just launched 4 different separate white papers to really talk about the whole tokenization market within Malaysia, Indonesia, recently Philippines, and we also look at the Brazil market as well. So we definitely see Southeast Asia has a lot of potential, especially in the tokenization part. And for us, how we actually really determine the whole local potential is also what is the local needs, right? Because every market is different by itself. Like for example, Indonesia, we look at a lot on like credit. And for like Philippines, we really look at wallet inclusion because the e-wallet adoption in Philippines is huge. There's like 93 million users of like Gcash in Philippines, for example. And for Malaysia itself, they look a lot on like capital market, and that's why we look at like the whole infrastructure on that. So every market actually has their own niche, and for Southeast Asia, we definitely still see a lot of potential, especially on the tokenization part. And then coming to like Singapore, like I think what Charles mentioned is plain, right? Like nothing goes wrong, but it also says that Singapore is really writing out the whole policy, really leading this whole industry by like, okay, MAS is coming out with like the whole framework for like stable coins, for instance, and then like followed by Hong Kong, right? So Hong Kong also, HKMA also recently, for a year ago, published like white papers to really guide these frameworks, etc. And even Taiwan recently comes out with a stablecoin framework in 2026. So in Asia itself, we still see a lot of potential. And besides tokenization, like what I mentioned, I think payments and stablecoin is a big topic and a super hot topic, especially early this year. And stablecoin topic has been quite stabilized because everyone is coming in to see like, okay, how can we really benefit our localized market? Because one biggest concern is still that stablecoin is still mainly dominant by USDT, USDC. It's still US dollar dominant. And why like, markets in Hong Kong or even upcoming Taiwan is coming out with all this framework is because we want to see how we can really benefit our local market instead of like, okay, shall we follow, because US dollar adoption is huge, then that's when like, we follow and come out with like US dollar backed stable coins. So there's no longer that case, and regulators is really coming into play and like really help to shape the whole industry. So upcoming, I'm super excited for 2026 actually, because there's more regulators willing to voice out, especially like, for example, Indonesia, OJK is coming out with sandboxes. Hong Kong is also like, next year we can really see how this sandbox results is really behaving and see what is like the next big market or big potential that we'll be looking at in Asia itself. Yeah.
I see. So I think like, I believe there's a lot of stablecoins and payments builders around here as well. But one of the very interesting questions is what challenges for them, for early stage Web3 founders in Asia commonly face when approaching global VCs?
Yep. So, I mean, just now we all talked a lot about like this keyword regulation, right? So I think there's still a lot of like regulation uncertainty when global VCs really look at the Asian market itself. They will really see like, what's your roadmap of like, are you going to get your license here? Are you going to get your license there? And when we look at like, especially cross-border payments, etc., are you going to like, follow the MiCA framework? Are you going to follow this policy, that policy? So regulation is definitely one key area that a lot of global VCs is looking at. And two, I feel like, especially Southeast Asia founders or like Asia founders is about storytelling, because they focus a lot about like, we are building this technology, like, okay, with blockchain, this is what we are going to change and how we're going to change the world. But they forgot to really storytell how to commercialize and like what is the real business model behind that technology. And how global VCs really wants to see is, we don't just want you to scale within your local market itself. Is there an opportunity for you to scale globally or like capture other markets? So like Indonesia startups, are you going to eventually like, also look at Philippines or like the nearby markets, or are you wants to like just dominate the local market, home market first, right? So storytelling. And two for us is also that I think a lot of startups in Southeast Asia and Asia market has no strong international network, and that results into lesser international traction. So when we don't see a lot of like growth traction at the start, it's very hard for global VCs to enter because the risk is too high. So I think mainly these three things. There's definitely other things that global VCs look at a lot, but at least for us, this is the things that we often ask Southeast Asia founders for.
Thank you so much, Kate. Really great insights as well. I've been talking about stablecoins, payments, infrastructure as well. Not to mention, money market fund, DAT, also custodial. I want to go to Marcus. This is very interesting because you've been around dealing with a lot of institutions across Indonesia and also globally as well. So from Indonesian and regional view, your point of view as well, how do you see corporate and institutional appetite for Web3 evolving, especially on those technologies?
Thank you. I think before I answer to the questions, I would like to give a couple contexts, right? One, definitely us in BRF Ventures, our expertise is in the local market. If I take illustration from Charles, we are the durian, and I'm the durian enthusiast. I like to find my right durian and eat the right durian. And I think that is very important because it means that every local market need a local context, right? You cannot apply what's work in Singapore and then just bring it back to Indonesia and pray that it actually works. And vice versa. You don't bring whatever works in Indonesia and you bring to Japan and pray that it actually works in Japan. Meaning that understanding local context is very important, especially when we talk about institution appetite. I think across this year, a lot of talk, especially about institution, is on regulation clarity. And I believe regulation clarity is the bare minimum for institutions to adopt the new technology. But if I ask what is the appetite of institutions today, I guess the very big factor is how the senior leadership is actually take a look at the new technology itself. Regardless, you have the regulation clarity, you have all this great technology available in the market, you have all these new entrepreneurs, founders who want to break things and make things right, make value and whatnot. But if the senior leadership in the institution is not open yet to adopt the new technology, that will be hard. Right? So for me, the most important factor for institutional adoption is how the senior leadership take a look at the technology and have the willingness to apply and hopefully balancing between risk and reward, right? Especially for us in the banking background. Banks, as you know, is a very highly regulated market. And I've been doing it for many times, right? Sometimes it's not that the startup doesn't want to work with the bank, but working with the bank itself is very hard. Navigating inside the bank is very hard. You need to find the right person, you need to persuade the right leadership, you need to show the right metrics before then your products can actually be used, right? So how as a community, as an ecosystem, we work together to show winning milestone. I feel that is the key, right? And defining this winning milestone is what determine a crucial factor how institution will then actually adopt. If you take a look at globally, like Singapore, like even Japan and whatnot, we saw a great stream of institution is actually starting to adopt in many ways, right? Starting from their treasury management, starting from their payment infrastructure rail for on-ramp, off-ramp, including settlement and whatnot. But here, I think we are just at the start. Right? We are at the start where institutions are now becoming curious. The question now from them is not asking about what is blockchain, but now is the most question asked from them is how we can apply and be benefit from it. I feel that it is a good progress, right? Second point about institutional adoption, especially in the Indonesian market, we see a lot of regulation clarity, and I really appreciate the regulations, especially from the Financial Authority, OJK, For instance, with the launch of Sandbox, it allow more experimentation in a right risk framework, right? Meaning that there's a playground for entrepreneurs to fail, and it's okay to fail because you can then learn from the mistakes before you can apply it into a bigger audience. So I feel that is the two determining factors when we talk about institutional adoption, especially looking at the local context in Indonesia.
I see. Thank you so much for the insights, Marcus. I think talking about senior leaderships is one of the key things that you want to take a look at as well for adoption, and also regulatory clarity is one of the things that is very important. But talking about this, I'm really curious. I want to ask you one more questions regarding, if from your experience, when you go to institutions, right, there's always a language gap. There's a really big language gap between Web 2 and Web 3 world. When you want to tell, to the bank, let's say, hey banks, please adopt custody solutions like digital asset custody, or even like stable coins, use stable coins for your use cases. So from your experience, how do you resolve that language gap for them to understand the use cases and the benefit for them as well?
I think the language barrier when you talk about institution is how you separate between uncertainty and risk. A lot of the discussion when you talk to institution, if you give them something that is uncertain, it's hard for them to actually understand and have the willingness to actually apply. But if we take a look at a risk management framework, when you are able to translate from uncertainty to risk, then it is something that now they are willing to adopt because now they can calculate what is the benefit for me if I use it or not. I give a very simple example. If you play coins, tails and heads, right? Coins, tails and heads. It is a risk, right? 50-50 risk. I can get heads, I can get heads every single time. If I play at that infinity number, it will be split evenly between 50 and 50, correct? This is risk. You can calculate the risk. Uncertainty, meaning that whenever I throw the coins, I have no idea. It can be tails, it can be heads, it can even land in the middle, so it's not head or even not tails. It's uncertain. And when things are uncertain, it's very hard for you to speak to institutions. Right? I feel the key is how you can translate this uncertainty into risk. This is one of the basic principles of a risk management framework, right? So for all the builders here, when you're able to quantify your uncertainty into risk, then people may understand better, and by understanding better, they have more willingness to actually adopt and apply your principles of new technology. The problem with Web3 are founders usually take it easy, right? I mean, there's also investors. You met with lots of founders, right? Especially Web3. I'm really sorry I'm using this word, your crypto bros. They all use all this uncertainty, right? I have no idea. It can go up, it can go down, pump and done, and whatnot. It's hard, right? But if you can quantify the uncertainty into risk, I guarantee that will be super easy for you to actually go and talk with institutions and even ask them to willingly collaborate with you.
See, thank you so much. That's a high quality insights right there. So I'm gonna go back to Charles. This is very interesting. So I noticed everyone's talking about tokenizations. Everyone's talking about DAT. Everybody, even like in Korean Blockchain Week, when I attend one of the panel there, right? They're still talking about DAT coming to Wall Street, which is a really bold statement in a way, right? I was like, wait, what? That's so crazy in a way. Is it that fast, right? So finding, the question is, finding new innovations is growing rapidly. They're talking about DAT. They're talking about RWA, tokenizations. They're talking about money market fund. But is it really the product market fit right now? How do you see that sweet spot between innovations and product market fit?
Yeah, so I think for those who don't know what DAT stands for, maybe I just take a step back and give a very quick explanation. So DAT stands for Digital Asset Treasury, right? So if you think about the biggest DAT on the US stock market is actually MicroStrategy. So the founder, Michael Saylor, right? He's the way that he runs his company is to raise capital from the public markets and just accumulate Bitcoin, right? But of course, the way that he does it is differentiated from just a passive holding strategy. He's able to, or he claims, he's able to time the market, decide when to issue the right credit, and to accumulate Bitcoin at the right time. So there's a certain active management to it, not just a passive holding strategy, because otherwise, you know, investors can say, oh, I just buy a Bitcoin ETF, right? There's no difference. So over the past 1 year, actually the whole DAT market has been rather hot. I think there's a lot of DATs out there. I think probably 50 to 100 of DATs that have been raised, and hundreds, if not billions or millions have been raised to accumulate for such DAT, or rather shell companies, to accumulate crypto assets. To me, actually, I think this is a very hyped phase. I think there's just too much capital, but very few real management teams that's able to execute that strategy well. I do think that a lot of the teams actually raise capital from DATs. They saw the opportunity, they saw that there's a lot of money going to this space, so they just wanted to quickly place out the shares, raise a big round, and then figure out what to do with the cash later on. I think that's very dangerous. And if you ask me, I think fast forward 5 to 10 years down the road, I believe 90% of the DATs today will not be around anymore. But of course, those who survive, right, they are able to really have a very clear accumulation strategy, a very clear yield strategy in terms of how they accumulate and use these digital assets to really generate yield for the equity holders. I think only a few DATs will eventually survive. So I think my point is, in crypto or Web3, the cycles come and go, right? The trends come and go. I remember in the last cycle, to give another example, NFTs were really very hot, right? One picture of a monkey can be worth like millions of dollars. If you look at it today, a lot of prices have actually come down. So I feel that because the industry is still so young, right? Every time there's a new development, every time there's a new trend, there's a lot of interest, and it all drives up the prices. But I think as investors, at the end of the day, we focus a lot on fundamentals. We go back to basics, right? Does the business model make sense? Can the business actually generate revenue? Can it turn into a profitable business at some point in time? How sustainable is it? So I think at the end of the day, we focus, as long as we focus on very clear metrics, fundamentals, I think that is actually the real, that's actually a more sustainable way of investing. Yep.
I see. Thank you so much, Charles. All right, I'm going to Takashi. So very interesting because we have a lot of builders here and talking about skill sets, right? As a founder, there's a really big gap in Web3. It compares to Web2 as well. In Web3, what are the founders' gaps between governance, compliance, and technical debt? Most concerns Web3 VCs today. What do you assess from them?
So I talk to founders every day for of course due diligence purpose, but to also understand their long-term vision, why they started the business, and most of them, I would say, I really have great respect, and I admire them because I wouldn't personally able to take that kind of risk to run a company, start a new project, and build a team, and really get focused to risk your life to build something new. And I'm on the side of believing that those strong willingness could lead to a very big success. But I think I wouldn't say it's specific to Web3, but given that we are investing at the very early stage, in a lot of cases, I still feel that there's a still weak governance on the team, on the organization side, which often lead to a lot of different incidents, including hacking or any other security-related issues. And also, unfortunately, it often lead to different incidents at the time of listing, because this is where the money moves a lot. And when the money moves a lot, this is a phase where a lot of people, including exchanges, market makers, or advisors, or community, and among all those different communities, they all jump into that one point of time to try to make a best deal of it, where the governance comes into the question, and unless you're determined to continue with what you have originally planned with your team, with your backers, you tend to unfortunately lose a certain level of governance, which often lead to sometimes fraud, sometimes hacking, sometimes scam, sometimes just a breach of contract, for example. So I would say that governance is still an issue, and I wouldn't blame founders for that, but I would say because of the lack of rules around the listing or fundraise, the vesting schedule of the token, etc., governance becomes more important than the equity world, where there's rules and laws in every country for that. So I would say that where the challenge is in the crypto world is more at the governance level of each of the project or the team within the Web3 space.
All right, thank you so much, Takashi. I think still in a hot topic talking about stablecoins and whatnot, I'm going to Kate directly. What risk do you see in stablecoins, tokenizations, cross-border payments? I mean, like in Jakarta, in Indonesia, there's a lot of people talking about payments, cross-border remittance solutions using Web3 technology as well. What are the biggest risks from your point of view?
Thanks, James. So biggest risk, especially in tokenization, stablecoins, payments, etc. I mean, first answer, definitely regulation. I mean, this one we have been mentioning a lot of times, but that's definitely still the first answer. And I think second one, I mean, I'm not going to go in depth into regulations anymore, but the second one is really about the one that we really see, especially recently, where China also announced that stablecoin is illegal, etc. Is that we see one of the biggest risks is also that there's a strong dependency on US dollar itself. Like I think just now I also mentioned that stablecoins is still dominant by US dollar fiat base, right? But there's a lot of dependency because currently a lot of new players that comes in wants to really mitigate FX rates. They want to do more cross-border payments that is seamless and at a low cost. But all of this really leads to a US dollar dependency because stablecoin at the end of the day, the underlying is still like T-bills or like cash itself in banks. So that's one. And the next one is currently we see a shallow token secondary market. So what I mean by this is not that those meme coins where we treat in exchanges, etc. But there's a lot of infrastructures or even just like we mentioned about NFT, there's other parts of blockchain or Web3 is for example DePIN, where tokenomics plays a huge part in the success of the project itself. But is the token really tradable, or is this token only for governance purpose? So we don't really see very mature secondary markets for such tokens, and that can potentially be a risk because that's something that we see whether there's a potential upsides at the end of the day. And I feel like the fourth risk that we see recently is really liquidity, because it's not hard to build the technology. Blockchain, I mean smart contracts, etc. A lot of coders can really, build on a project that is really, there's real use case. There is people that's using and there's people who needs it. But at the end of the day, who is providing that liquidity, that initial liquidity? There's very limited. I won't say there's a lot of LPs out there willing to put money or like initial, like, oh, how to like start running this. And that is one of like the biggest risks that we see, because the story can be good, the tech can be good, the team can be brilliant, but if there's no big capitals that wants to really come in to help to run this or like really to validate this whole thing, this project doesn't stand. So I think that at the end of the day, that will be one of the biggest risks that we are looking at or actively trying to avoid. Yeah.
All right, thank you so much. I think like regulatory is one of the key things as well. For potential risks for innovation as well. That's why I'm going to Marcus for the next questions regarding regulatory risk as well. But talking about, all these institutions want to invest on Web3 solutions, Web3 technology for their internal technology as well and adopt all of them. Talking about adoptions, what's gonna be the key driven factor for them to actually invest in Web3?
I feel at the end of the day, what really matters is the talent. Whether they have enough talent to do the adoptions, and whether the talent are able to build a scalable infrastructures when the adoption is actually happen, right? Because when we talk about new technology, new platforms and whatnot, there are many readily available platforms that you can use in the market. You want to build a stable coin, for instance, there are a lot of solutions for stable coins. You want to do your tokenizations of assets, there's a lot of platforms that you can use in the market to tokenize your assets. When you want to do payments and whatnot, there are many payment rails, many new technology available in the market that you can easily adopt. But at the end of the day, I think what really matters is, do you have enough talent, not just to adopt, but to eventually make it as your critical capabilities going forward in your institutions, right? Because adoption is one thing, but how from this adoption it becomes something sustainable in your company and eventually can able to yield a good return on investment, I think that it's a two different matters, right? So I think in short, talent is really what matters and what really separates institutions who are willing to adopt or institutions who are only curious in understanding the technology.
I see. Thank you so much, Marcus. I think as an investors, we really want to invest in Southeast Asia next technology and also next future, the big next thing, right? We want to invest in the big next thing. But this question is a future outlook for Web3 because we always want to see, even in retail, everyone wants to see what's next for Bitcoin or what's next for Ethereum and whatnot. But for us, we want to see what's next of the technology, what's gonna be the next thing in finance, future of finance as well. So the question is, what a scalable and well-regulated Asian Web3 ecosystem could look like in the next 3 until 5 years? Because we're talking earlier about DAT, NFTs, and whatnot. It's usually cycle-based. But what kind of scalable and well-regulated Asian Web3 ecosystem could look like in the next 3 and 5 years? I'm gonna go with Charles first.
Sure. So I think one area that, obviously it's been talked about quite a lot, but I think one area that I personally quite bullish on is real-world asset tokenization. So if you look at statistics today, the amount of real-world assets that is on-chain is around about 30 billion US, 30 billion. It's quite a large number, but if you look at it compared to the amount of real-world assets out there, it's in the trillions of dollars. So what this means is that bringing real-world assets on-chain itself, there is a 100x market opportunity. I think real asset tokenization really leverages on the strength of blockchain technology. So what does blockchain technology do? Blockchain technology is universal, it's borderless, right? You can issue an asset in one country, but someone else in another country can have access to that. So that is, I think, the crux of bringing assets on chain, and I do see a very big market opportunity, especially in Asia. So if you look at, I mean, when I think about the development of blockchain technology over the past 10 years, right? 5-10 years ago, a lot of the infrastructure is actually built out of the US. So you look at protocols, L1s, right? These are all invented by the US. But I think the next phase of adoption, the next phase of technology growth is really about real world adoption. And I think in Asia, adoption for real world assets is going to be big. And I think that's one area that I'm bullish on. Yeah.
All right. What do you think, Takashi?
So I think there are several sectors, including RWA, stablecoin, and also different area like AI or IP-related infrastructure with a different chain that are supporting the infrastructure in those kind of places. But I think in a very near term, I would say within the most imminent area in I would say RWA itself, because I'm originally from the financial world. I would believe that now that we've been talking about equity tokenization, real estate tokenization, commodities tokenization, there is one big part of the world that we've been ignoring is FX, foreign exchange. People are using it every day, wherever you're in the world, and it would be so efficient that you can exchange your money into other currency in a way you're doing it by sending your stable coin to another company very quickly. That's going to be a huge innovation. I'm still paying between 5, 6, 7% at the airport whenever I need a quick cash. Every country I'm flying for this kind of Web3 events, and I find it so surprising that there was no project or no solution to that kind of thing. I think that those people who's in the business are great people. They're working hard to collect money, etc. But one piece of technology in this industry could be a game changer for those people who need the money for everyday life, and also for retail traders who are more, I think, deep and bigger than crypto traders still as of today. In Japan, FX traders in Japan is much bigger than any other underlying asset. People call it Mrs. Watanabe, but there's no one called. There are a lot of people called Watanabe, but Mrs. Watanabe is a name of the group of retail investors who in FX market. Because we call it that way because even the Wall Street hedge funds or investment banks are afraid of those people because they're trading so much almost every day. And the real picture is that there's no giant corporation who's dealing FX every day. It's just a bunch of retail people like any one of us here trading using their mobile. So it means that there's so much demand on the FX and tokenizing that by reducing the trading cost and also the slippage could be a huge pain point solving, which I really encourage everyone here to think of this angle for any project that you may work on in the future.
All right. So, Marcus.
I'm going to answer very short because the time is up. It's flashing. So I guess what I'm excited to see is how the new technology can solve inefficiencies in traditional financial services.
All right. Kate?
Yeah, and I think I'll go last. I think I'm quite glad because since the inception of our fund, we already shortlisted 5 key areas that we really want to focus on for the entire fund life, right? So at the start, I mentioned DeFi, stablecoin, payments, tokenization, and infra. And I think the speakers also mentioned a huge overlap. So I think for us, thank you for validation as well. But then the area that we really want to look at for the next 3 to 5 years, the one that we didn't really mention will be infrastructure. Because we all know that, okay, crypto is entering bear market. There's a lot of projects that's dying already, but infrastructure will always be there, especially blockchain infra that will be enabling all these builders to move forward. I think infra is something that we'll continue to look at for the next 3 to 5 years.
All right, thank you so much. So, yeah, our time is up. So thank you so much. That wraps up our panel for today. Give an applause for all the speakers and all the insights. All right, I'm gonna give it back to the host. Thank you so much, guys.
Thank you, James. Once again, such an insightful discussion for this afternoon. Before you guys step down from the stage, can we have a moment to take a picture together on the stage? Yes. Okay, can you move a bit forward? Yeah. Thank you so much. Once again, thank you so much for our moderator, James Eugene, and our panelists, Charles Koch, Takashi Hayashida, Marcus Liman, and Kat Wang. All right, can we have a big round of applause once again for our panel number 1 for our first day of Indonesia Blockchain Week 2025.